In this week's episode of the Stockscores Market Minutes, I'm going to talk about the importance of adding to your winners and how to do that. Then I'll take a look at the overall market. We've had a pretty good rally in the last little while. I want to show you what is likely to happen next. I'll do a market scan in search of trading opportunities and look at the trade of the week. That's all coming right up. All right, so let's talk about adding to your winners. It's an important concept that can really improve your performance. When you get it right and the trade is working, why not add more? It's okay as long as you don't add more risk. And so the way that I like to do this is look for new entry signals that have a new stop loss price that is higher than the previous stop loss price. What we're trying to do here is only add when we got that new signal with a new stop that allows us to mitigate our risk overall. We want to use the profits from that earlier entry to basically cover the risk of adding a bigger position or building a bigger position. And so what I'm going to do this week is show this concept when we get to the trade of the week on NTEC toward the end of the presentation. For now, let's get right into our market analysis, and we'll start with the US markets as I always do. Here is the S&P 500. You can see on the short-term 30-day, 60-minute chart, we're in a nice upward trend. Looks pretty good. We had a little bit of a pullback here on Friday. Didn't break the upward trend line, so that is fine. But the reason it pulled back Friday is because the overall market has now risen up to the all-time highs. We've come back up to the July highs, and as I often say here in these weekly videos, when the market rallies into resistance, it usually gets stuck at resistance. We can see that happening back here where we rallied into this resistance level, got stuck and pulled back. And so now we have rallied up to this resistance level and we'll probably get stuck here. Doesn't mean that we have to pull back, but it's likely that we will at least go sideways for a little while, and it wouldn't surprise me if we pulled back a little bit. So we'll keep an eye on that going into next week. Looking at the small cap sector, the Russell 2000, which is the US small cap stocks, it too has risen up to resistance, and on Friday it closed below its open. That's why that candle is red. But you can see pretty good gains through the month of September, coming up to these all-time highs where we'd expect the market to stall. No problem. I expect we'll probably pull back a little bit, maybe go sideways for a little while, but the market is slowly building some optimism again. Moving along to the Canadian market, looking at the TSX 60, you again can see that nice upward sloping channel for the Canadian market. But again, just like the US stocks, they also had some pullback on Friday, but that healthy pullback is not a problem because it has not broken the upward trend line, and so I remain bullish here, but just realize that with a market that has rallied into resistance at the all-time highs, we're likely to stall here, and you can see that on the weekly chart. I expect we go sideways next week at least. On to the TSX Venture market, which is, of course, the micro cap stocks or the small cap stocks in Canada. We're slowly building a bottoming pattern. We broke the downward trend line. We're now working on building a rising bottom sideways pattern, but ultimately we need to break out through that resistance level if we're going to take a crack at moving back towards the springtime highs. On to currencies. Here is the US dollar to get us started. You can see that we are in an upward trend, but we had a couple of down weeks in a row. Not a big deal. We're basically pulling back to the upward trend line, but that may continue. And reason it's happening is we've come back to those all-time highs, well, not all-time highs, but local highs going back to 2016. When you rally into resistance, you usually get stuck at resistance. Very simple rule that everyone should keep in mind. Canadian dollar had a bit of a bad week. We pulled back a little bit after this bounce back here, but we're slowly building these rising bottoms. Again, this is a bottoming pattern. You can see we're building an ascending triangle where we have optimism. We call that optimism because the bottoms are rising on the chart. And ultimately, the Canadian dollar needs to break through that resistance level, and then it can start the recovery that it's really began with the break of the downward trend line back in early June. On to interest rates, and I've been talking the last couple of weeks about the likelihood that the bond market would pull back. Now, the reason I said that, and I've discussed this past weeks, but the reason I said that is because this upward trend line, the market had run far up and away from the trend line. And there's a simple rule, another one of those important rules to keep in mind. When prices run away from the trend line, they usually come back to the trend line. So you can see we went parabolic to the upside, far above the upward trend line, and then this week a big sell-off in the bond market that took us close to the upward trend line. I think we can probably have a little bit more downside until we hit it, and that's just a typical process. I think the bond market is probably topped out here, which means interest rates have bottomed out near term. So if you're looking to lock in a mortgage, I would jump on that fairly quickly. On to commodities. Gold, with the market stabilizing, with some discussion about perhaps China-US trade making some advancements on negotiations. Well, that gold has been a hedge against lower interest rates, against global recession from a China-US trade war. And that is why the last 2 weeks we've seen gold come down. Why? Because the market's been moving up. The market is saying, well, we don't think there's going to be, a problem with China-US trade, or at least there's some hope there. And that caused the bond market to go down, interest rates to rise in the bond market. And that's really why gold is pulling back. So no problem. Until we break the upward trend line, I wouldn't get too concerned, but we're right at it right now. And so I think you have to make sure that this gold market can bounce off of that. When we look at the shorter term chart, we see that there's been a fairly good sell-off in gold in the last 2 weeks. And so I would be cautious, but remember, any bit of tension in the stock market, any bit of a pullback, any concern about trade talks between China and the US not happening, you're going to see gold become popular again, as it is a hedge to that China-US trade talk issue and ultimately interest rates, which are kind of driven by China-US trade as well. Oil tried to make a little break this week and it failed. You can see that during the week it was actually above that downward trend line, but it pulled back before the close of the week. I see some support coming back to oil stocks, but I think there's work to be done. And until we can really make a break out of that pennant pattern, an upside break, I wouldn't get too excited about buying oil or oil stocks, but there's a glimmer of hope there, some light at the end of the tunnel. And so we want to keep an eye on the oil market because there could be a good rally in the oil stocks, which are really heavily oversold, if we can get a rally in oil. And finally, the fear chart, you can see that fear is pretty low again. Market feeling a little more confident, but I'm still not ready to say that we're out of the woods, because if anything negative happens on China-US trade, if Trump puts out a negative tweet, something like that, we can get a dramatic pullback in the market and a spike in the fear index, the VXX. So this is an important chart to keep an eye on in the next little while. So my ratings then, I am neutral long-term on the US market simply because it's bumped up against resistance, but still bullish short-term. It has had a nice little rally. Canadian stocks bullish on both time frames. Gold neutral long-term, bearish short-term, and oil neutral on both time frames. Stocks have achieved the comeback from August weakness, and that's been a nice little rally back to the all-time highs. But now that they are there, we should expect sideways or perhaps even lower trading action in the near term as the market focuses or fights with that resistance. Gold is showing some profit taking. Oil is stable and trying to break out, but it hasn't done it yet. Fear relatively low, but I wouldn't take my eyes off the market for too long because that could change dramatically. All right, so let's jump over to the Stockscores website and run a market scan. What we're going to do here is run the action breaks scan, action candle breaks. This particular strategy is an investor strategy available to my investor or active trader members of Stockscores. If you want to learn more about the different membership options, just jump into trader training and go into either learn how to trade or the products and services area. You can learn more about how to become a member of Stockscores. For now, let's just run the scan. This is going through the entire market, looking for stocks that made statistically significant abnormal price moves with abnormal volume through a downward trend line potentially. So we can now take a look at the charts and see if there's anything good. So let's first look at this one. I think this looks pretty solid. We've got a downward trend line here that was broken from a rising bottom. You can see the spike in volume. So Taseko Mines, TGB, pretty good chart pattern. I like that. I'd give that a 7, maybe a 6.5 out of 10. If I go down here, NURO, kind of a rounding, they call this a rounding bottom pattern. pull that up there. So you can see we've switched from falling tops to rising bottoms, broke to the upside with some strong volume there. That also looks pretty good. I mean, this is a real penny stock, but if you're into those kind of stocks, that's a pretty good setup. I'd give that about a 6.5 out of 10 if I was to rate it. Next up is the Taseko Mines, the one that we already looked at, but this is the Canadian listing, so the difference there is in the difference between the currencies. And I just cycle through these. I do this scan every day. It produces some real good picks of stocks that have been beat up a lot, but are maybe capturing the buyer interest again and starting to break higher. Here's another one breaking its downward trend line. Now, this one's not quite as good. A couple things wrong here. First of all, we're still below that downward trend line. Yes, we've broken this one. The other problem is that although I really like the very strong volume, it's from a new low as opposed to a rising bottom. So I'd give that a 6 out of 10 as a rating. Moving right along, got a few more to look at here, and then I will get on to the trade of the week. A reminder, click on that subscribe button and click on the like button if you enjoy these videos. It encourages me to do them every week. And if you want email alerts when I upload a new one, also click on the little bell icon. You'll get an email alert when you do that. So I don't love any of these. I'm just going through the patterns. I'm looking for very specific things that I teach in the course material that's available from Stockscores. But it was just those first couple that I thought had the best setups. And so I think we'll leave it at that and jump back into our trade of the week, day trade of the week. And this is also an example of a stock that you can scale into. And I use this example this week because in my Active Live webinar, one of my students traded this and earned a really nice RR. I think he told me that he got a 21 RR. So what do I mean by RR? I mean reward for risk. So if you risk $100 and you earn a 21 RR, that means you made $2,100 on the trade. Now let's go back to why this was a good trade. It triggered my action candle entry signal right there. There's a little pink dot, a little hard to see behind some of those lines, but that was the entry signal, and that's all algorithmic. I have a computer that churns out these entry signals all day long, and that's what the Active Live service is all about. So this particular student of mine bought the stock there. But what he also did is he scaled into the position as the stock went higher. And he told me that he scaled in here, and I believe he said here as well. I'm going by memory, but I believe, or perhaps it was here. I think it was these two. So this one and this one he added to the position. So he bought it here to begin with, and then he added more here because there was a new break from a pattern. That's a little pennant pattern with a support price that was higher than the previous entry. And then here there's a new break with a support price that was higher than the previous entry. And all of those are allowing us to build a bigger position as the stock went higher. Now, he told me that he ultimately sold right here on that little break of the parabolic trend, which was an excellent exit. I would probably wait until the break of the upward trend line or the break of the moving average to exit, which wasn't as good as he did. But nonetheless, if we use my more conservative exit without any scaling on a $4,000 capital position, this trade earned a 10 RR without scaling for a $1,000 gain, a 25% return. Now with scaling, using his exit, a 21 RR return would mean a $2,100 gain, roughly a 50% return on a one-day hold. And these are some of the things that I teach. I'll be doing some teaching again late October, November. So go to the Stockscores website. I've got a number of webinars coming up in the month of October. They're free. You can register for them now. They're coming up in a little bit over a month, but why not register now if you like? All right, well, that has been the Stockscores Market Minutes for September 16th, 2019. Hope that you've enjoyed it. If so, subscribe to the channel, hit the like button, leave a comment. Most importantly, trade well.